Hey guys, Mike here. So what a rebound in the market, right? I mean, you got the SPY, the Q, everything's flying. I'm going to show you exactly what led the way today because it was like a polar opposite of yesterday and why this happened. Plus, we're going to a lot of the stuff, but one is there's one bank, which I don't know how it's still in business, but when you look at what it's cost to insure now against this bank, it's absolutely amazing, you know. And then there's another ETF, no matter what happens, and they just keep getting that money. They keep getting that money. But of course, starting today, what happened? CPI comes in, exactly what people thought it was going to be. Came in at 6%. The big boys were projecting 6 to 6.1. Market likes what it has to say on that one. More importantly, though, what happened? You can see there. These are the sectors that led the way. Number 3 was financials. Why? Because you had regional banks going up 100 to 200%, some of them, but communications, technology number 2. And speaking of technology, what do you got on the Qs here, which has had a massive day? You got it above the 200, you got it above right there, the 2023 anchored VWAP, you got above the October low anchored VWAP now. And of course, what's it trying to get above now? The February anchored VWAP was trying to get above. And you got that trend line right above it, which is rejected multiple times. But if you want to look at a beautiful support/resistance flip that happened today, and we'll see if it continues, but you got around that 294 area, and you can see support, resistance, gaps above, opens right at it, bounce, boom, takes off, right? And so now we get to see if we get above that anchored VWAP right there from February, and above that trend line as well. You can see it's been rejected 4 different times. And so do I think it's going to be easy? Probably not, but we'll have to see, right? Depends on momentum, where it's going to carry on to. And I know you're thinking Meta, what's going on with Meta? Huge day for Meta, right? Coming up on this trend line here, we talked about that it hadn't been above in a long time. If it gets above it, it's super bullish. But what do? They keep firing people. That's what keeps bringing the stock up, right? So now they're going to slash 10,000 more jobs. Also promised not to fill 5,000 open positions on top of that. And so, you know, that's going to help. In this day and age, that's what the stock market cares about. Firing people, laying them off, and getting slimmer, right? Cutting costs. And so that's what keeps pushing Meta up, right? Tesla, nice recovery here over the last 2 days. You can see around that 178, 182 area right there. It was support earlier. If you go back a ways, you'll see where it was resistance on this run previously, turned into support, and so now it's trying to hold that and keep moving up. We'll have to see if it does. The big real thing to look at with Tesla is going to be what's going on with the options, right? Because that's what drives this thing anyway. Now that you have people in there, you can see you still got that $200 call wall with monthly expirations happening Friday. So we're going to be stuck between 180 and 200 until Friday, or we're going to end up getting stuck somewhere down below, like from like 160 to 180, somewhere in that range. That's what we got to look at. And if you get anything out of this, guys, please hit that like, subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. And of course, we got to remember, you know, why is this happening? One, you got Fed blackout period, so they can't run their mouth. They can't try to control the market in any way, shape, or form. 2, you got the Fed and Treasury all backstopping banks now, saying forget the 250,000 that is. FDIC insurance, we'll just backstop it all. Don't worry about it. We'll give you loans, whatever you need, right? So they stepped in and did that. That makes the market feel, you know, warm and stuff. And then, of course, regional banks skyrocketing to the moon. That's the other reason. The other reason, though, to watch out for, and same like I was telling the member, they're saying what's going on with these moves, is I think we're just slowly positioning for Friday's OPEX, right? And the reason why I say that, because on the SPY, it jumps. It's 391 today, it's 391 tomorrow, and all of a sudden it jumps almost 400 Friday, right? And you see all these puts. People just loaded into them, especially when the bank started failing. And so you got all these puts past 390 and below, and you see the amount of call, and you're kind of going, well, that's a lot, right? And so which way would you want to go if you were, you know, selling these things? And so that's what we got to make out. Again, if some major event happens like the banks, it don't matter. You saw that last week, right? But in this case, the market makers can control the market when you're in a settle down type of market, right? And you saw today, what happened? SPY goes to the moon, it's like, holy cow, and then just comes soaring back down. Still ended up nice for the day, but not where it was at with that 200, right? I mean, everybody thought we were going 3-4%, and you would think it would with regional banks doing what they were doing, but they're just such a minute percentage. But technology was ramping up as well, right? And so again, be waiting to hear it, but just watch Apple and Microsoft. Again, those two stocks, if they ain't tanking, you're not going to see the market tank. It's not going to happen. You're going to need a major event to push them down, right? Like a recession, maybe. And so, you know, that's something to look at just because they make up such a big amount. Now, the ETF I'm talking about, and you won't be surprised by this, but I don't know. Let me know in the comments if you're surprised by this. No matter what happens, look at old RK, man. Biggest inflows since 2021. Here are the banks people think are going to collapse, and this happened Friday, I believe it was. And look at all those inflows. My Lord, they just poured into. And I don't think that's us. I think that's somebody else knew something was going to happen. Maybe they knew the banks were going to step in and save the day or something. And so they knew if they stepped in, yields would fall, which means technology goes up. And of course, what is RK? It's all high beta stuff, right? But it just flooded into RK. So let me know if that was you in the comments or not, but I just don't think that big a spike was retail just going, I'm going to send all my money in there as banks are imploding at that moment. And so that's just absolutely crazy to me. And then the bank that I'm surprised still in business is Credit Suisse. I mean, look at this thing. Let me know if you know anything about this bank, but look at the cost to insure Credit Suisse. And these are CDS's, credit default swaps. Look at that right there. We'll go back to 08 where we had a financial crisis. Look where it was at. Let's draw a line over here. Holy moly. I mean, look at how much more now it is costing to insure against this, your investments basically. And if you look, just in case you don't know what a credit default swap is, and there's no reason you should know, it's basically a financial derivative that allows investors to swap or offset their credit risk with that of another investor. To swap the risk of default, the lender buys a CDS, a credit default swap, from another investor who agrees to reimburse them if the borrower defaults. And understand, they may buy one, but they also can sell it, right? So you'll see what they'll do is they'll be paying premiums over here and then selling it and collecting premiums over there, which makes this market huge. And I'm trying to find the exact numbers, and let me know if you have them, if you're working in that market or whatever. But like going back to 08, for example, because I figured out this has to be a pretty big market. And in 08, I read where it was like 22 trillion was in the stock market, but the credit default swap market was like 44 trillion at that time or something. So, you know, right now the numbers are all over the place. I don't know how big this market is. Let me know if you got the exact number. I've read so many different numbers. I don't even want to put one out there right now. But again, things are getting risky, and in risky times, that's when you see this market get enormous, right? Stock market shrinks down, this kind of market goes up. I just don't know what the exact number is because they're so far all over the place with all the different sources. I couldn't find one to be exact, so I don't put it out there to you. I think it's pretty big. That's all I'm going to say. And, you know, let me know what you think about Credit Suisse. Is it the next one to drop? I think a lot of people are betting on that. And usually if it's costing, obviously you can see during those crashes, you see when's the highest time to try to insure. It's when bad stuff's about to happen, right? And so keep that in mind. Now tomorrow, who knows if it's going to move markets. If we come in, the number's too hot, we will. But PPI comes out in the morning, retail sales. Are we still spending? And again, the retail sales aren't adjusted for inflation. So even if we beat the numbers, they're just not adjusted for inflation, okay? But are we still spending? Most likely. There's no doubt. But understand this rally. And that's what I talked about. Remember Monday, I said, are we going to go on one of these crazy rallies where it's this, oh my God, the Fed's pausing? And because right now, they're figuring in like the rate hikes are done by May. Done. And remember, we don't even have a meeting in April. So there will be no rate hike in April. So if they end up doing, let's say, do a 25 coming up here next week, and then after that, you got a long time to go before we come up to the next, rate hike, if they're going to do one at all. But either way, they've already capped it, and they're already saying there's going to be cuts, right, because of what's going on with the banks. But now I'm like, why are you saying that? Because they're backstopping the banks at this point in time. So even if they start to go under, doesn't matter. They're going to come in. They're going to rescue everything they can to rescue it. Which of course, what does that do? What does that show banks? They're like, oh, well, we can take way more risk, right? Because you're going to backstop everything, all the deposits anyway. So customers should be fine putting their money here, and we'll just do what we want to do. Because guess what? There is no accountability for the executives. That is, they'll continue to sell stock and make their money and leave with golden parachutes when they get fired or kicked out of the bank for running in the ground, because that's what happened in 08, right? Same thing is happening now. Okay, I mean, as I just did a members video showing them, you got the CEO, CFO, and another executive sold $4.5 million in the Silicon Valley Bank just 2 weeks prior to the collapse. You don't think they knew what was coming? Come on. Yeah, they did. Of course they did. Right? But nothing will happen. They'll get to run away and be happy, and they'll get hired by another bank. Just watch, because I know somebody worked for Silicon. They actually worked for Lehman's. Right? These guys just recycle in and out. It's the buddy program. I know you. Come on, don't worry about it. That's the way it works. So, let me know what you think. PPI is coming in tomorrow. Going to come in hot. Going to come in under. And the question is the market even going to care? That's really the big thing to look at, right? Is the market even going to care? So, should S&P or the SPY move up as fast as it did today? Most likely it shouldn't, but depending on regional banks and other banks, if all the financials just continue to roar up and technology continues to go, oh, well, even though yields were actually up today, technology was still up, right? The 2-year bounced back today, up about 10%, I think it was. Didn't matter, right? Semis, everything, flying, right? Didn't matter. So, we'll see. And again, I showed you ARK, so people are flying into that one. And that's as high beta stock as it gets. And so we'll see if we go on another one of those crazy runs. Because remember, seasonality-wise, mid-March on into April is actually supposed to be pretty dang decent. But again, we'll see. We'll see what the market wants to do. So again, it tends to rise in the craziest of times, does it not? Anyway, it's fun to watch. It's a great show. So, let me know if you got anything out of this. Hit the like and subscribe button, guys. Always enjoy reading the comments. Appreciate your support. And I will see you tomorrow.